Okay, thank you so much for giving me the floor. So, as you correctly said, my name, I'm Jean-Yves Nakar. I'm the current Director of Research and Strategy at the BRVM, the Regional Stock Exchange for the WAMU region. So I'm quite honored to join you today and to talk about this issue of debt management, but from the perspective of the stock exchange, to show you how we offer an alternative to government and company to better deal with the debt, the cash management. As you know, and as it was said before, debt vulnerability remain a big challenge for us, and especially to achieve a number of targets such as the SDG or the agenda of the AUC. But experts and we all agree that developing the African domestic market is one way to better deal with this situation. This is why I want to share with you the experience of the BRVM in this regard. I don't know if you are able to see my screen.
We can see your screen.
Can you? Okay, perfect.
Yeah.
So basically, the BRVM was a venue for capital that was created in the 1960 and the 1986. Sorry, and we started the operation in 1998 to create a world-class market. To prior that time, it's only the Ivory Coast that had the capital market, and then as a region, we realized that it was better to consolidate our effort in one single place and be able to have a big market, because that in capital market the market size values matters quite a lot, and that makes us the first regional market in the world to be fully integrated and fully electronic exchange, very exclusive to our market. So we developed a number of framework and to meet the international standard, and we launched our market. As of today, we have one regulator, the AMF-UEMOA, that regulate the market, authorize all the listing, and monitor the secondary market, the BRVM, and give the penalty as in his role to supervise the market and give sanction to non-compliance company, the people who do not respect the rule. And in this regard, we have, as of today, around 40 licensed market operator from brokerage. We have a number of 40 something brokerage firm and 30 asset manager. We have a custodian bank, a number of advisors that are licensed to operate on the market. Since 2012, which from a period of more than a decade, BRVM went from a capitalization of 1,000 billion CFR francs to 8,000 billion CFR francs. So it's a huge development. So the equity capitalization since that time increased by about more than 100%, with a number of an increase of 24% of listed company. We also have the evolution of the growth of the bond market is even bigger, because we went from 21 listed bond in the 1999 to today, to more than 100 listed bonds. We are today 134 listed bond, which is an impressive development of the bond market. So that means people really use it. And in the next slide, I will give you the more figure about that. They also daily trading volume has increased over time, and the trading value as well has increased over time. What we are really proud of at the BRVM is that one of our mission, it was to be able to provide capital, to be a place where the government could look for capital, and from that time we were able to all the WAMU states were able to mobilize a significant amount of money on the market. The Ivory Coast, the Togo, the Senegal, Mali, the figure talk by themselves. We also had a number of IPOs from that time, mainly from the Ivory Coast. About 60% of the IPOs of the listed company come from Côte d'Ivoire. Today, and that is very linked with today's topics, is who own that asset, who own that debt, And at the BRVM, you may see that majority of the investors are located in the WAMU region. Around 76% of them are the WAMU region. We have 6% from other African country, mainly from South Africa. Maybe about 4% is from South Africa, 4%, and the rest is spread across the continent. We have 10% of our investors come from the US, 7% from Europe, and and from the rest of the world, a very tiny part. And mostly those are institutional investors that invest to the market. So that means the long term, the pension fund, especially that the insurance company and the banks, that are mainly consisted of the institutional investor that operate on the market. We are also fund manager that account for 25%, and also the retail investor come to 20%. In our development program, we think that the retail investor should be more present. So we are working on a number of initiatives, such as literacy program. We have developed a robust plan in terms of financial literacy program to facilitate or disseminate the stock market culture in our region. In order to get those results that I've just shared with you, we followed a strategy, a very clear strategy. First, we decided that it was very important for us to position the BRVM as an important financial institution on the region, not only on the region, but on the region, on the continent, but also at the international level. Because even we've learned with international investors, if we also want to attract them more on the market, they need to know that our local investors are quite active on the market. Since we achieved that, I show you the figures. It's also important for us to have them come to the market more at a more important level that they are today. So this is what we are also pushing toward our promotion, the promotion of our market. Actually, early last month, we went in South Africa at the GSE, the Johannesburg Stock Exchange, to all the roadshow to talk to our investor there, with the market operator, a number of all our stakeholder, market operator, regulator, company, insurance company, all of them. We went there to have a dialogue with the South African investor, because we also need them to increase their position in the market. Secondly, we achieved those results by enhancing the BRVM attractiveness to encourage more company listing. Because what do governments say, or what companies say? Or could I raise that amount of money in our market? I want to make sure that I can be on your market. I will be able to raise a 200 billion CFA or $1 billion, 500 million in our region. So we did all of that by enhance BRVM attractiveness, and we enhance our attractiveness to also encourage them to come. And lastly, we also get very creative and to create new products and services that can also be more attractive to our issuers. In this regard, we join a number of initiatives, such as the Sustainable Stock Exchange Initiative, as promoted by the UN. In 2016, we integrated the MSCI Frontier Market in the same year, member of the WFE, which is the largest stock exchange association, as well as that is at the international level. But at the continental level, we also are part of the largest association, which is known as the ASEA, the African Securities Exchange Association. And all that strategy also made us be the fifth largest exchange on the continent as of September 2023, in last year. In order to position ourselves on the international map, we found that would be very good for us to partners with the best people. And in our strategy today, in our new ambition, especially with the ambition to implement new products, new services, new product, in the market. Especially as of today, it's we are looking at green bonds, social bonds. So we decided to partner with the Luxembourg Stock Exchange to help us for them to help us to develop sustainable finance within the WAMU region, to facilitate cross listing for BRVM, because a number of the listing has occurred in the past by financial companies such as the AFDB, the West African Development Bank, and they already raised some fund abroad. So we decided, because of their size was in the large size, 3 billion. This is why we decided to partner with Luxembourg Stock Exchange in order to enable the cross listing, which means a part of this part can be raised locally, and the second part internationally, to also be to avoid our institution, government, and company to be more vulnerable to exchange rates. We also collaborate with them in a number of different programs. In April, that was in September 2022. In April this year, we also decided to partner with the Global Green Growth Institute, GDGI, to enhance the capacity of our stakeholder. Because if we want them to raise some fund, green, social, and sustainable linked bond, they need to know about it. They need to know to understand more the principle. Why they need to choose those instruments. So for us, it was very crucial if we want this project to work. So we partner with them to be able to do that. And and few weeks ago, I'm happy to share with you that BRVM welcome its first listed social bonds, with the electricity company for about 60 billion CFR francs on our markets. They show you the results, a little bit of our strategy on green bond, social bond, and we believe that in the next future it will be able to have a more. The company will be able to use more this instrument, and we will have a better impact on the people. Also, you may agree with me that remittance is an important flow of funds from our diaspora, and it's an important source of external financing in the WAMU region as well as the continent. And the support government, we want to support the government for tapping into the diaspora funding. So we launched also the diaspora bonds with a bank, a BHS bank, a few years ago, and it was a success, because that channel the diaspora fund into a concrete project. And this is what we need also for the for our economies, because you know that mostly the diaspora, once they do the remittance toward Africa, it goes to consumption. People just use that money, but they do not go toward investment. This is our role as stock exchange, and is a way we offer to channel directly that money to any project. So what else need to be done for us to keep on our mission is to keep encouraging large and public organization privatization, because we I mainly talk about bonds since it's the topic of today. But we also do encourage privatization because, raising debts is for short-term financing. On the long-term financing, you need capital, and government also need both. So you need to have a good capital and debt management in financing the economy. So we on the other side, we do encourage the government to because at some point they finance they co-owns a number of company, which is yield some dividend, but we did a study, BRVM, when we were at the ASEA with IFC conducted the SOE report, and that showed that the potential of SOEs, the privatization on the economy, and the findings were quite interesting. I can share with you few of them. For example, the average revenue growth across all of the 21 SOE listed after the list went by around 200% up, the revenue when they list. Because when a company come in the market, it's subjected to a number of disclosure, and it make into you enter the market environment where the company need to perform, and because if not, the share price will go down and so on. So it's put the company into in very competitive environment where its performance improve. And we did that report. I mean, we did that. We contributed in that survey by IFC, and the results are quite interesting. So we need a privatization. Private company also, we encourage them to list on the market, because it's the same as government. You need to also have a good capital and debt balance. And we decided also to have a special treatment for SMEs. And for SMEs, we are developing a new debt product, such as a basket bond, a way that a number of 2 or 3 company or more can come together and issue a bond, together. And also mini bond. A mini bond is it's for them to if they do not need to raise a lot of the regular size of the bond, they should have a way to just get this a smaller amount they need to for their development. So we are quite active in terms of increasing the offer for government and company. We believe that in order to be efficient, we need to create new markets. So we are working on the derivative markets and the commodity markets. We were honored to be awarded by the government of Cote d'Ivoire the exclusivity for managing its or conducting the project of the agricultural commodity exchange, and we worked there. We got recently got an authorization for the launching, and it's something that we will be done quickly. We also, if we need, if we are working on increasing the offer, we need also to increase the demand. And the increase of the demand, I show you earlier on a number of slides in which you saw that the main investor are the institutional investor. So we want them to, the insurance company, pension fund, to increase the presence on the market. And this is why we are working with the respective association to influencing the regulation, because it's more about regulation. It's not only them, it's about regulation. I will take just one example. Let's say today we want to go to, we will develop a green bond market, which is a green bond market has less yield than the regular bond, because the smaller yield you have, it's what they call a greenium. The greenium is the fact that it's you sacrifice a little bit your yield for the planet. So we need to have an enforced regulation in those institutions, insurance and pension fund, for them to forget about the yield, and for the sake of the planet, they will invest on those bonds. You see it. So this is why it's very crucial for us to work with them closely with all these associations to implement a regulation. If not, they will not got at the level. They will not invest in that, you know. And we want to promote. We will keep promoting and attract foreign capital. Foreigner also need to increase the presence in our market to attract new cash, new money. We are working on establishing a BRVM Academy to train our future market operator, all the financial community, but as well as the investor, the people who want to invest in the market. They need to be trained. They need to understand the deep root of capital market that would help them not panicking in down period. And we keep participating in a number of market integration projects, such as the ILP, the African Exchange Link Program, in which BRVM is part. It's developed by the ASEA, the African Exchange Association, to facilitate cross-border trading across the countries. Basically, if you are in Cote d'Ivoire with that platform, you can invest in Kenya, and it is the case now. It's active, it's working, and I encourage you to use that platform. Thank you so much for your attention.
Thank you very much,
to you,
Yves. Yeah, thank you very much for your wonderful presentation about the capital market. you will have to stay behind for us to field some questions to you. I hope you still have some time.
Definitely.
Okay.
Definitely. I'm here. I'm following.
Okay.
Even
Excellent.
after I'm still here. Thank you.
Okay, excellent. So we'll have some questions from the participants here. So.
Can you hear me?
Yes.
My name is Johan Kreno. I'm currently with the African Development Bank, but previously from South Africa, debt manager. So my question to you is that when I look at the WAMU region, they have a very strong primary market in terms of the AUT that's situated in Senegal. But when I visited Togo last year, I realized that those bonds are not listed on any stock exchange. So my question to you is what I mean, it ideally for any, so there's virtually no secondary market happening, although they have a very active primary market, and for those 8 countries in the WAMU region, through the AUT, they managed to finance government. But at the end of the day, you need a platform, and I would think perhaps your stock exchange will be ideally for that. I'm not sure if what happened in other countries, but it looks like government bonds are not listed. Or is there, and should they not be, or what is your focus or your drive to get more bonds listed on your exchange?
Thank you so much. No, I think maybe there was a misinformation, because mostly our bond, the listed bonds are from government, mostly. And I saw Jul Koulibaly in the room, and he can tell you that Ivory Coast has listed recently a great number of bonds to finance its economy. It's more on the corporate side that we want to encourage more company to use the market to finance their development, because they rely, when it comes to debt, they rely more on banks. Then they do not look to the stock exchange. But we are here also, we can provide both. So, but for government, out of the 130 listed bond we have, it's 80% or 90% is from the government. Thank you.
Let me thank you very much for the presentation. I personally got very much enriched. A comment and the derived question is on your presentation regarding diaspora bond. And I'm saying this because most presentations about diaspora bond give the impression that because our diaspora are emitting money home in an unstructured form, in quotes, we need to structure it in such a way we can deploy it to development purposes. Exactly. But in my view, I think that's the wrong conceptualization. The fact that our diaspora are sending money to our villages to retired people like us whose pensions are too poor, and much of which has been eroded by inflation and devaluation. If they send money to us, it's solving a problem. It's social security. Because, of course, you know better than I do that in most of Africa, there's no social security provided by government. And these remittances back home to the villages as a social security for people to pay school fees in the primary schools, to pay for the hospital bills and all that. So that in itself is a function that should be preserved. Therefore, when we are taking a diaspora bond, it should not be presented in such a way that we are now replacing those so-called social remittances into development project remittances. Rather, it should be additive, not subtractive. So if people are remitting money back home, which is a transfer, we should assume that such people also have savings for investment. So we should be targeting the investment component of their total income, instead of giving the impression that we are converting the social remittances into developing remittances. The two should be encouraged. Don't you think so?
Thank you so much. I like your points. Social remittances and investment remittances should be promoted equally. Totally agree with you. And in fact, maybe it wasn't clear, but we do not intend to subtract that willingness that people want to send money to their family for social security purposes. We had, as you also as African, you know that some of the diaspora living there, some of them mostly want to come back one day in here. So they are preparing that future. And sometimes they rely on their family that do not use the money as it needed to be used. This is why sometimes it's part of the reason why remittances is not at the level as it should be, because people sometimes do not, the diaspora like reduce the money they want to send, because sometimes the family here do not use the money properly, even for the school, for the health purposes. So they feel like they sometimes need a third party to kind of help them better manage that money. In that regard, for example, when it comes to housing, when they want to build a house, it becomes a challenge for them. This is why we thought that diaspora bond could be a good way for them to help the government, because their government is also the family, so it's a large family, help the government or help a dedicated project. In this case, when we launched our first diaspora bond, it was with a bank. So when there was a way to lend the money to the bank, and that could help you buy a house at the same time, so that by investing your money in that program, it could help you to get a house in Senegal. So that was a good deal for them. And this type of diaspora bond we want to promote. But in any case, is something that could be subtractive. It will be addictive. Thank you so much.
Questions? Okay. All right, I guess it's time to take a break now. Let me just check with okay, ici, okay.
Je pense que le Togo a été interpellé. Je vais apporter une précision. Sur le marché régional de l'UEMOA, il faut distinguer deux segments. Il y a un segment par syndication et un segment par adjudication. Bon, donc sur le segment par syndication, c'est vrai que le Togo n'a pas beaucoup participé, mais les dernières émissions que nous avons eu à faire remontent à 2021 ou 2022 avec 158 milliards. Et donc, ça a été coté à la bourse ça a été coté sur la bourse des valeurs de la BRVM. Bon, donc, on a eu à faire aussi, je pense qu'il y avait 4 ou 5 émissions que nous avons eu à faire sur ce segment, mais toutes ces émissions ont été cotées à la bourse. Bon, peut-être là où le problème se pose, c'est sur le segment adjudication, où franchement le marché secondaire n'est pas très développé. Bon, je ne sais pas quelle structure le consultant avait visité. Je ne me rappelle pas l'avoir vu au Togo en ce moment où il était venu. Je vous remercie.
Okay, Yves, you can take this last question, and then we break we have a break, a 10-minute break, and then we'll back for.
It wasn't a question, it was just a comment.
Okay.
But
Okay, Jean-Yves, thank you very much, please.
thank you
Thank you very much
so
for
much
the
for having me.
Yes, please.
Thank you so much for having me, and I will keep also following the discussion. Thank you.
Yes, please. Yeah, just stay behind there in case there's any other
Yes.
subsequent questions. At this
Yes.
juncture, please, ladies and gentlemen, I want us to take one more brief presentation, very important from the, what do you call it? Deposit money bank, lending money bank perspective, quoting from Dr. Nwanko. So I'm going to invite Laju Atake from the Rand Merchant Bank, Nigeria, to make his presentation. Please. Laju.
Good evening, everyone. Due to some technical difficulties, I couldn't start or commence the program, but I've tuned in a couple of times and I found the conversations very enlightening. And I think the hope is that after this session, we will take the learnings to our respective countries, respective markets to implement it, and then hopefully we have deeper debt capital markets in Africa and in respective regions of Africa. So just to introduce myself briefly, my name is Laju Atake. I work with Rand Merchant Bank. I've spent about 13 years in the capital markets. I think I'm blessed because the first half of those years, I was on the buy side, so I was a portfolio manager, right? So before moving to investment banking, moving to debt capital markets, so it kind of helped shape how I engage investors, how I engage clients. And in terms of my role, it's not just only applicable to Nigeria, we cover broader Africa. So in terms of debt market, capital market transactions we've done in Ghana, we've done in Nigeria, obviously, we've done in Rwanda. We supported the first sustainability-linked bond last year in Rwanda. We've done in Zambia, done in Botswana, done in Namibia, and we're looking to do more transactions in other African countries, right? I think for me, I understand that there are different countries here at different levels of their debt market journey. And what I've tried to do is just to outline what we believe are attributes of a well-functioning debt market. And wherever you are in that journey, you could just pick your learnings or implement your learnings, right? I know it's getting close towards the end of the day, so I can skip state of debt markets in Africa and just fast forward to attributes of a functioning debt capital market. Yep. I'll come back to section B later. So what are the attributes of a functioning debt market? I think for us, what we've always seen as the bedrock is having adequate regulations. That's the first step, right? And what we do at RMB, we work with stakeholders in the country to help them develop rules and regulations that are needed, right? We don't take any fees for that, but we see it as our contribution to the country. So the first step is having regulations. And what regulations? I think the first regulation would be regulation for issuers, issuances, and products, right? I recall with the rise of GSSTBs, green bonds, social bonds, sustainability bonds, in Nigeria, we've been pushing the SEC to bring out the rules so that issuers can issue them. There are a number of issuers that want to issue, but because that rule is not applicable, right? And you have some other markets where, in terms of regulations, they're more friendly. So they might not have the rules, but when you have the transaction, they can work with you to establishing the rules. So I think the first step to developing a proper functioning capital market is to just have the rules and regulations that guide mode of operation. Another regulation that is very important is regulation for the parties involved in the transaction. So you need to have rules for the issuing houses, have rules for lawyers, have rules for other parties, exchanges, those institutions that will provide market infrastructure. So that's another set of rules you need to have. And one thing we find is that there needs to be adequate collaboration between different stakeholders. I heard Dr. Abraham mention it, that most countries, you should have a committee where you have representatives from the Debt Management Office, Central Bank, and the Securities Regulator, so that they meet periodically and they can align objectives. So if you're in a country where you don't currently have this, I would recommend you do so. I think the next attribute for us is ensuring that you have appropriate market infrastructure. And for me, market infrastructure is that road that enables the car move, right? You can have the rules and regulations, but if you don't have the infrastructure, right, how would you have exchanges that you list? How would you have settlement, proper real-time settlement? And when you don't have this real-time settlement, it hinders liquidity, it hinders participation, it hinders size. So for us, I think the next major step is ensuring you put the market infrastructure in place, put the respective parties. So for instance, a credit registry would ensure that there's no information asymmetry in the market. When banks want to facilitate loans, they go and check the credit registry. And we're seeing a number of regulators also ensuring that that is applicable for debt capital markets for corporates. And maybe I just pause here. I think for us, right, when we're looking at the success of the debt capital markets, we shouldn't look at it only from the sovereign. We should look at it enabling corporates to issue, and I think that's when you really have success, because then the government can take its hands off from financing some certain infrastructure projects that corporates can finance, right? So after establishing the right market infrastructure, I think the next and very most important step for us is ensuring you have a deep investor community, deep investor base. That is what will sustain the debt capital markets, right? I remember in Nigeria in 2013, the largest block of investors in tech was the PFAs. The asset under management was 4 trillion. Today is 19 trillion. Prior to the devaluation, that's almost $42 billion. Imagine Nigeria has that pool that the government, corporates can go and draw on. And then when you saw what happened in 2022 to early this year, when no one could tap the international markets, Nigeria could rely on its solid internal funding base. So it's important we foster a deep investor community. I think one, by working with regulators to foster mandatory saving requirements. You know how Africa is. It's difficult. If you don't have this mandatory savings, if Nigeria didn't have this mandatory defined contribution, I don't know what I would talk about Nigeria today in terms of some of the infrastructure projects we have, in terms of the government plugging its financing gap. So I think one thing we can take to our respective countries is working with stakeholders to see for certain institutional investors, how can we ensure that there's mandatory savings? And then that can be the yardstick. And one thing about this set of investors is that the banks can only produce funding 5-7 years. These guys can give you funding for 20 years. Can give you funding, sorry to say, for eternity. In Nigeria, we have perpetual bonds now, right? And this PFA, some of them invested, right? So when you have this solid mandatory base, it helps. Another thing we've seen is tax incentives. And I think it was mentioned earlier on. So in Nigeria, at a point, there were waivers on withholding tax, just to encourage investors to participate. And we saw that once those waivers came about, even on capital gains tax on sale of some of these instruments, not only for the sovereign, but the corporate, right? So once we saw those waivers kick in, we just noticed an increase in participation by certain investors. right? Another thing that I think was a bit prominent then, but has calmed down a bit because of what is happening globally, was then admission into global bond indices. There was a time that Nigeria's bonds used to be on JP Morgan's Global Aggregate Bond Index. And then what that does is that investors just track the index. So if your country meets the criteria, I think I will encourage people to go and check some of these global bond indexes. What are the criteria? They look at liquidity, they look at your FX stability, they look at your size. So if you're able to meet some of these particular thresholds, you can then go and engage the indices providers and say, oh, my country's bond should be here. As a result of that, one investor in Brazil will have to mimic that. Another investor in South Korea would have, and before you know it, you see dollars coming into your economy, right? I know that has come down a bit, but I think it's something we can all do to bring in investors into our issuances. Then another thing again is creating products for different segments of the market. I think as you go, you realize that there are different investor bases that we can tap. And still using Nigeria as an example, recently the DMO introduced something called a retail bond for individuals. And what they can do then, since the lot size is much smaller, the pricing can be much tighter, right? So Sukuks, recently we've been using Sukuks to fund road projects across Nigeria, right? So we need to also try and be innovative and push more of this product. I think one thing we can't fault is periodic engagement with investors. The investor community is needed. So after deepening your investor base, the next important point we believe, right, is liquidity. Liquidity is king for every investor. If they see no way out, they would want to come in. That's the simple truth for investors. And I think it was mentioned here, it's something that's been advocated that most of us as countries, we should try and implement this primary dealer market makers scheme. In Nigeria, at least they ensure that there's always supply, right, and there's incentives for them to do so. It also ensures tradability and liquidity. Also building issuance sizes. When you ensure that a particular instrument has a large amount, it encourages liquidity. Settlement platforms, working on secondary market trading, qualification. So what we tend to do for corporate bonds and other bonds to incentivize banks and others to invest is that, oh, you tell them, oh, this bond will qualify for repo transactions, zero risk weighting, and others. So moving to the next point, I think for me this is very important. For me is when the corporate starts issuing in the country that I feel the market is really developed, right? So one lesson we can take, I've been making different countries. I know in one of the forums I've attended with AFDB too are also working on this. In Nigeria, there's something called infra credit that was recently instituted, maybe the past 5-6 years. And what infra credit is to do is to provide guarantees for potential corporates that want to invest in infrastructure projects, right? But maybe because of the risk of the project or because of the profile of the company, typically the big investors will not participate. But once you see that guarantee from infra credit, all the pension funds, the banks, the institutional investors, they're happy to invest. And in terms of the shareholders of infra credit, they're all DFIs. So that's what ensures that they have a AAA credit. So what this does is that it unlocks funding for some issuers that would never get this funding, right? So it's something we should think of in our respective countries. How can we create an institution that is there to provide guarantees for companies that want to do infrastructure projects, green projects, right? Another thing we've mentioned is tax incentives and sovereign benchmark. Moving this point, I think it has been overemphasized when I joined in. The debt capital markets to this, the role of the debt management offices in collaboration with the central banks and the fiscal authority to ensure that you have debt sustainability. Because when debt sustainability is a problem, the interest rates, lack of interest begins to come in, right? And then low interest rates, of course, not artificially created, but created over time with budget. Somebody was laughing when I said artificially created, but low interest rates that are created as a result of prudent financial management, reducing your budget deficits. And I know in 2020 in Nigeria, one could argue that maybe it was artificially created, but the debt capital market exploded in Nigeria with low interest rates. When you had single-digit interest rates, I have a chart that I'll show later. You saw corporates that never come to the market. You saw an explosion in the market. You saw issuers issue 7-year bonds at 5%, fixed rates, and they're still running with these bonds up to now. So everybody does interest gathered for the debt capital market. If you scroll down now, you see a slide that speaks to commercial paper issuances and corporate bond issuances in Nigeria. If you can scroll down. And you see that in 2019, and it might not be too clear, in 2019 for commercial papers, which is the short end of the curve, only 467 billion was issued, right? Over that time, FMDQ in collaboration with SEC, with the CBN and DMO have issued market-friendly rules and regulations that's incentivized other issuers to come. And you can see the increase, right, from 467 billion to 1.6 trillion. Using the old exchange rate, that's about $3.7 billion. So imagine corporates can raise $3.7 billion from the local economy. Just because we've deepened our investor community, we've ensured there are rules, the market infrastructure is not ideal yet, but it's getting towards that. Look at the number of issuers we had from 2019 to 2023. From 10 issuers in 2019, largely blue chip companies, to 56 issuers last year. 56 different corporates came to issue commercial papers, right? This year, people are asking, will that increase? Interest rates are higher, we're seeing, but it tells you that if you have the right infrastructure, the right rules, there are corporates, and you have the right investor community, there are corporates that want to issue. You can scroll down to bonds. The bonds is not as large as commercial papers for certain reasons, right? But you can also see that there's been an increase. If you look at 2020, this is just solely corporate bonds, and it's excluding state subnational bonds, so it's just corporate. If you're looking at from 2020, when you had the low interest rates, you can see that increase to 2022. And in 2022, the refinery project in Nigeria, 300 billion, Dangote funded 300 billion naira from the debt capital market. So it tells you the size of the debt capital market. It is a catalyst for economic growth. I think we can just scroll up back to why we need to have a deepened debt capital markets, where I'll round it up, conscious of time. So I think one of the most important reasons why you need to have a deepened debt capital market, right, is that you don't want to fall victim of going to your central bank to fund you, right? You can scroll up. You don't want to go to the central bank to fall victim. And we see many African countries recently fall victims. And what that causes is inflation, right? It causes deep inflation, right? So that's one of the reasons why you should ensure you have a deep debt capital market. Also, it helps you reduce your debt issuances in foreign currency, right? I think looking at Nigeria currently is about 60-40, 60 local, 40 foreign, right? Some other countries, it's way skewed. It's maybe 70 foreign, 30, and then you are susceptible to movement in the exchange rate. I think another reason too is improving financial inclusion. With different products, you see the average man on the street participating in some of these issuances. Also improves financial stability, right? You can diversify. Also, a good debt capital market also helps the CBN in transmission of its monetary policy. Because as you move your yield curves, it affects also corporates, right? And it also moves, so it affects behaviors. So when you have a deepened debt capital market, it helps you also transmit monetary policy, fiscal policy ideally. So I will just stop there because of our time. Thank you for listening. I don't know if there are any questions.
Thank you very much, Laju. I don't want to embarrass you, but I have to acknowledge what he went through to get here, to make this presentation. He was literally detained at the airport since 8 p.m. yesterday. He was able to come out this morning.
This afternoon.
This afternoon. So he has gone through a lot, but he was able still to come and make this presentation for our benefit. So please let us applaud him. And the most interesting thing is that he's still very cheerful. I thought he would have been very gloomy when he comes in, but he has not slept. Okay. Yeah, so we've listened to his presentation. We want to entertain a couple of questions before we go. Yes, please.
Thank you for your presentation. It's very, very enlightening, especially for me. I'm Frederick Bobicra. I'm the Director of DEP of Liberia. We are working on a reform to establish the debt market, and you have just laid a foundation for us. And one of the points that you raised, the issue of the legal framework, is, is our challenge as we move forward. Not a question like, but after the program, we'll be looking forward to collaborating with you to see how you can help us in the process as we work with the African Development Institute. Thank you.
No worries. I'm grateful and happy to support in that, right? I think one thing we do for legal framework, right, is most times you can work with the exchanges or the regulators to have a standard template for what the legal agreement will be, so that everybody that is coming to issue would run with that and maybe just tweak it. So that's one way of trying to ensure you have a good legal framework everyone can use. But we'll speak outside, and I will speak with Chidi, because I noticed a number of people were taking pictures. If it's something we can edit and just share, so that they have that and we can always use that.
Hey, my name is Beth Alon from Sagar, and I'm from Ethiopian Capital Market Authority. Thank you for the presentation. So from the graph, I saw that the corporate bond issuance of 2022 was 772 billion, but in 2023 it was 146. So is there any reason for a significant decline of the corporate issuance?
I think very good question, right? And one thing you would see in the debt capital market is that interest rates influence behaviors. So when interest rates are very high or are rising, most times you see issuers will want to raise only short-tenured instruments, especially the corporates. They don't want to go and borrow at 22%, 20%, right? So they will just go to the commercial papers. And that's why it's good for you to have a functioning commercial paper market, which is short-term, a functioning corporate bond market. So depending on the interest rate environment, these corporates are able to issue at least at any point in time. So one major reason was that interest rates began to increase in 2023. Also, there was the elections. So the other macroeconomic activities, there was the elections happening in Nigeria. And then most times corporates will want to see how the elections pan out before they come and do any large capital raise, to see who wins, the policies. So that was one of the other reasons. And I think the final reason too was that in 2022, we had a major issuer do a large size, which was Dangote Industries. So it was trying to finance the refinery project he was doing. So Dangote, out of the 722, Dangote accounted for 300 billion, right? But now what we're seeing is, because interest rates are even higher in 2024, less corporate bonds, more commercial papers. So this trend might just continue till interest rates begin to moderate in Nigeria. Thank you.
Sorry, just on this high interest rates, what do you think could be done to lower? Is it just external factors? So I don't want to hear, I'm putting you now on the spot, but I want to hear from you, what can we do to reduce borrowing costs in Africa?
Very good question. Please ask Dr. Abraham. But it's a very, very good question. So you're looking at it from the cost of issuance and also interest rates, right? I think from interest rates, for me, the primary way to reduce high interest rates is just financial prudency from the sovereign. When you have consistent budget deficits, and that's the problem of Africa. If you go to Switzerland, Switzerland always has a budget surplus or a balanced budget. For me, I think the first problem is always having budget deficits. Then the second problem I think we have too in Africa is we need to invest in infrastructure. When you don't invest in infrastructure, it causes structural cost push inflation. So many African countries are suffering from cost-push inflation, structural inflation, because, for instance, in Nigeria, in the north, they grow tomatoes, but the transport is not good enough to bring it to the south, or there's no storage. The tomatoes are wasting. Cost of tomatoes are going up. So apart from having a balanced budget, but I think the next thing is investing aggressively in infrastructure. Is painful, but when you invest in that, you reduce cost-push inflation, you reduce imported inflation coming in that pushes interest rate. And I think, unfortunately now, there's a general interest rate increase globally, right? And we see that in developed countries moderating. So I think we'll catch up with it in sub-Saharan Africa, but we need to focus on those structural cost push inflation. Then there's the monetary policy side. Most times it's just reactive, right? And trying to defend the currency. Another issue too is the currency. Defending the currency pushes interest rates up. So those are the issues. If we can solve gradually, I think with time, interest rates in Africa would begin to subside and moderate. Thank you.
No, thank you very much, and I fully agree with you. But I would like to add one dimension for us more and more is what we think that is a bias on perception of risk in Africa. If you look at our African Economic Outlook, which we launched 3 weeks ago in Nairobi, we tried to do some study, and we really think that we need to improve the image of our country. We need to work with a rating agency. So at the end of the day, we just observe that some countries are paying a very high bullet, but at the end of the day, the risk is not likely what was people perceive. I don't know what your perspective.
No, I totally agree with you. When we're pricing corporate bonds, for instance, where we're bringing a corporate to the market, in arriving at the price, you look at the credit rating, then you start looking at different risks, and you start adding a premium to what the government is raising. So if you can reduce the risk, overall risk, you also bring down your cost as an issue. And that's why, for instance, there's some African sovereigns, almost similar ratings, but if you go to the Eurobond market, you find out that this sovereign's Eurobond is far lower than this other sovereign, and the ratings are close, but because the markets perceive as lower risk, the premium on that is a bit lower. So risk is also a very, very good point we need to address, tackle, and take note of in reducing our cost.
I thought Dr. Wanko wanted to say something even.
Of course, what I say is that I'm extremely glad that my brother has done it. And to be frank, giving a very good practical story of the debt capital market. He's giving a great summary of it. And if you recall, in the morning, we just followed the IMF World Bank format to say what should be done. But he has said exactly how it is done. So, it's very great, and we immensely thank him. I'm also so much elated that he is talking of the Nigerian debt capital market in practical terms, and what has happened. And one is happy that we are all part of the team that made all those happen. So it's nice you came. You're welcome. And if anybody disturbs you again, report the person to me.
Definitely, sir. Thank you, sir. Thank you, everyone.